Okay, so hello everyone, and welcome to another session of Seneca Fintech's Firesides. My name is Professor Ishaan Srivastava. I am faculty at the School of Accounting and Financial Services here at Seneca Polytechnic and the coordinator of Seneca Fintech. Our guest today is the inimitable Julien Phipps, who's the co-founder at Troply.io. Julien, welcome to Seneca Fintech Firesides.
Thank you, Ishaan. Pleasure to be here.
So I'm going to quickly read through Julian's massive bio. So give me a moment there. Julien Phipps is an innovative executive with over 20 years of leadership experience in growth marketing, sales partnerships, and strategic planning across technology, finance, and sustainability sectors. With a proven track record of driving transformative solutions and implementing effective revenue scaling plans, Julien excels in leading diverse teams and navigating complex industries. He holds an LLM from the University of Toronto, a BCom from the Royal Rose University, amongst other lifelong learning from various institutions. As the founder of Troply Inc. and Accelera Ventures, and in key roles at Nav Technologies, Flowcast, Emailage, All5 Sigma, all of which have achieved significant milestones. His community impact includes revitalizing the Vancouver Chamber of Commerce and leaving a community legacy impact via the Canada One Foundation and the Kids Fest at Vancouver's beautiful Kitsilano Beach. Julien is a strategic sales and RevOps leader with a strong commitment and a passion for innovation, excellence, and organizational success. We're all very glad to have you here, Julien. So
Thank you so much.
let's just jump directly into the questions and starting with your role and vision. Could you describe your current role for us?
Absolutely, yeah. So currently, I'm co-founder and partner at Troply. Troply is a firm that we've essentially relaunched. It's 2 years, just over 2 years old. We were operating a little bit in a stealth mode, if you will, but really, it's combining my partners and I's years of experience in our various industries, and we're empowering mid-sized companies as well as large enterprise to help them with their growth and scaling and needs essentially, and doing it in a way that really takes advantage of the notion of fractional leadership. So that's basically what I'm up to today. Previously, I was leading as GM and director of growth and biz dev at Nav Technologies, and Nav Technologies essentially a marketplace for small, medium-sized businesses focused on the U.S. market that needed to help build their credit, gain access to more financial products, and really have a strong understanding of what they need in terms of building their blocks of success for their business.
Oh, sorry, I was muted. Perfect.
There we go.
So, okay, that was great. Just a quick question. What's fractional leadership all about? Okay, now you're muted, Julien.
The fractional leadership is essentially the idea that those that perhaps have had a lot of experience in business in various disciplines are leveraging that experience and being able to apply that to sometimes early stage, mid stage companies, and even large enterprise that need that nimble approach and that external expertise outside of their organization to help them with a, I guess, pivotal event moment in that business, or a change event. And so whether it's launching a new product or perhaps even having a rebrand or something to that effect, that expertise gets parachuted in, if you will, and the ability to really add efficiency and the ability to do what that organization may not have the internal strengths to do yet, or perhaps the nimble, I mentioned nimble approach for large enterprise. Oftentimes it's surrounded by a lot of bureaucracy. So it's a good idea to have an external source come in and kind of lead it as a fast tracked project approach.
All right, awesome,
Mm-hmm.
awesome.
Yeah.
So about your vision, I want to ask a very generic question, very basic question, but something that can hold a lot of depth. What does fintech mean to you?
Great question. It's something that I've evolved my understanding as well. It's really the intersection between finance and technology. I think at the core, it really is, how do we make fintech more prevalent or available inclusive of all, different types of folks in various walks of life. Um, it's about taking something, from, the banking world, for example, something clunky and maybe more rigid, and taking an aspect of that and making it more user friendly, more efficient. I take an example of, how even in the early days, you could only go into a branch or into a bank to do your transactions. Now it's mobile. Now you have multiple different fintech companies that are making lending, for example, more accessible to businesses and individuals. Things that are enabling payments to be more prevalent for the unbanked or those that are disenfranchised and those, different demographics. And so, really, it's about fintech is about creating accessibility and financial inclusion.
All right, awesome, awesome. Now I understand that in terms of working with fintechs, you have worked with digital assets and blockchain solutions. Can you explain how you see blockchain transforming capital formation and its potential impact on traditional financial services?
Absolutely. Yeah. So great question, because blockchain is still evolving, and their use cases are kind of expanding as well. I would say that blockchain, in terms of investment, has always been one of kind of noted improvement and strides that have come a long way. Even from a regulatory perspective, you look at the evolution of different regional regulators, the SEC in the US, just being able to classify different types and have a stance on different asset classes and how they would regulate those. But really, it's blockchain solutions are really providing increased transparency, the ability to reduce the intermediaries, intermediaries being, traditional investment channels, such as, your mutual funds, whether it's investing through different institutions. You look at, for blockchain real estate investment, the ability to democratize that and make it accessible to the average individual that might put a fractional investment in a larger investment of a building. So that ability to gain access to and get returns, that is what blockchain is being able to provide, and also be applied to different industries, gaming, different sort of lifestyle communities. So all of these can be underpinned and will increasingly, have strides into what we're going to see, especially with the advent of AI and machine learning as well.
Mm. You mentioned the regulatory environment, and we know that, especially in the fintech industry, the regulatory environment is constantly changing, it's constantly evolving. How do you navigate these regulatory challenges, particularly those around digital assets? Say, for example, when you're dealing with investment advisors or with broker dealers.
Yeah, great question. And I'll go back actually to my time with Alt 5 Sigma. We were operating, obviously, a digital asset management company, meaning, the sales and the storage of, different blockchain or Bitcoin and Ethereum and different tokens. So all of these were early days. This is back when I guess it was considered a crypto winter. And, say, for example, just to give you a value position, Bitcoin was at about 5,000. Now it's 80,000 Canadian or so, right? So it was very much different in terms of uh, being in the early days, and
Mm,
trying to make your way in. So we also had to work with the regulatory bodies, be proactive, take a collaborative approach. In Canada, that was with IROC, the organization that handled a lot of, the broker dealer type individuals, and that, I think now they're called CIRO or CIRO. And so now, essentially, it's always best, I find, to be proactive, let them know, and be on their radar, but in a good way. Because oftentimes they'll also, they they were such, I mean, it was such an early time that they also needed external expertise. So oftentimes those committees were formed with your input or with the ability to work hand in hand and be a good actor with them, above board, and be able to kind of help even create the policies or shape, let's say, the policies that you'd want to see. So this has probably changed a little bit now as it's matured. However, it's always best to take that proactive approach, and that way also you're doing the public a service and being able to represent your company or the company that you're trying to grow in a light that is reputable and that people can believe and trust in.
Right, right. Um, you mentioned digital currencies as something that you work with, and you also have specifically worked with non-security digital currencies. First of all, could you explain what non-security digital currencies are all about?
Yeah, for sure. So non-securities can be essentially where there is not an actual asset, I guess, behind the security itself, right? So it could be more of several factors. I mean, if you go down the list, it's something where is not considered or classified by the regulatory body as being, a traditional security. Um, in that aspect, like working with those digital securities, it's essential to kind of consider different things when you're selecting them, right? So several factors could be, what is the market demand behind those securities? What are the liquidity factors? How easy is it to interchange and sell, on the open market? Technological robustness of those different securities, and then regulatory compliance. Making sure that those are things that are above board and are being able to actually be something that the public can actually research and actually do their due diligence, and also you can be proactive in that as well. So yeah.
Hmm. So if you were to list the top three most important criteria in selecting which non-security digital currencies to list, what would those three be?
Oh, yeah. Like in terms of like the top three main
Hmm.
criteria for digital non-securities,
Hmm.
or
Yeah, yeah, exactly.
um
If you were to select which has between an array of non-security digital currencies, how would you choose?
oh yeah, I would say, I mean, oh, that's a good question. I would say probably like um which which securities provide like real ownership rights to the
Hmm.
holder of those assets. For are they what type of assets are they? Are they debt or equity related? Do they have what are kind of the periodical payments on them? Because oftentimes you might invest in something and folks don't know the repayment schedule or the periodic interest payment schedule, whatever it might be. And
Hmm.
so those are important considerations. But as well as doing your due diligence on the security itself and the
Hmm.
company behind them, because even now actually it's evolved to a place where there are AI companies that will research the tokens or securities in that matter, for that matter, and provide you with essentially a huge abstract of information, sometimes more than even, I don't know, more than I've heard some more than 100,000 different data points
Hmm.
scraped from across the web and different actual sources of information. So those all go to help the individuals make a good investment decision.
Right, right. You mentioned real ownership. What's that about?
Like, yeah, so essentially, ownership rights when you're investing into any sort of investment, you want to understand the mechanics of that investment tool or product, right?
Hmm.
Some of them don't provide rights, as many rights to the investor. For example, if they're placed in a safe, which is a type of investment vehicle, um, versus like let's say if you had common shares or preferred shares or different, like
Hmm.
a safe essentially being like a simple agreement for future equity. And so those, depending on the company, how they structure the investment or the security will make a huge difference to what you can expect out of them and in what timeline.
Hmm. That makes sense. That makes sense.
Mhm.
Okay. Before I proceed, I just want to say a quick hello to Sarah, our chair, Sarah Potskoniak. Thank you for being here. Um, my next question. It's a little layered.
Right.
What would you feel are some of the biggest challenges that you've encountered when you try to promote blockchain adoption, particularly within institutional investors, let's say?
Right. Yeah, this was really challenging, and going back even, it seems not that long ago, but it was, even 2018, 2019, when I mentioned earlier, the I guess prevalence and the growth of these digital currencies were still at their infancy. And I remember being in New York and going, knocking on doors essentially, or calling and making meetings with various investment firms and trying to sell our institutional platform to them, to enable them to offer these to their clients, their end clients. And there was just so much, not skepticism per se, because they were still had enough of a knowledge base that they understood what this area of investment was. They called
Mhm,
it alternative investments, or exotic investments. But then, you face the pushback of, okay, well, what are the regulatory constraints? We don't know what liabilities based on our firm that we can handle. In terms of what exposure this places on their institutional firm. Those are some of the challenges. The volatility of the asset class itself,
mhm,
being very volatile, and how do they mitigate their risk as well as their clients' risk and exposure, and the need for robust kind of custody solutions. So, meaning, if their clients were, for example, buying and holding for a long duration of time, how would they do that in a way that those investments were secured and not susceptible to, let's say, online nefarious activities or hacking
mhm,
or anything like that. So we, in those days, still actually had a solution for that. It was a cold storage solution, meaning we worked with the likes of Garda, which is like a Brinks, the armored vehicles. Well, they also
mhm,
have
mhm,
custodial services, and so we were one of the initiators, or early, I guess, innovators, to have those investments taken off the blockchain, placed on a physical, essentially hard drive, and stored within a vault in the Garda, vaults. And so it would essentially keep those secure, where they couldn't be hacked, or messed with, essentially. So it was a
right.
very interesting solution. But even with having all of those, it was just faced with so much headwind and uncertainty and risk. So I think it would be a lot easier nowadays. I mean, you have JP Morgan, Jamie Dimon, like, at one point he was the biggest naysayer of this asset class. And today they're one of the biggest,
Yep.
holders of it. So
Hmm.
you've got a lot more traction nowadays, and it's probably much, well, a fair bit easier to make that sale.
Yeah. You know what? You make a very good point about the security aspect of digital assets, particularly the fact that in order to be completely secure in them, you need to literally take them offline and store them in a physical place. I mean,
It's
it
true.
sounds a little counterintuitive, but in the name of security, you do have to act like that sometimes. Now,
Exactly.
coming from the other perspective of revenue generation for the fintech firm itself, what would be the key elements that you're looking at?
Oh yeah. Okay. So in terms of revenue growth, yeah, really key elements would include, identifying and capitalizing on what market opportunities are specific to that business, right? Understanding the key drivers and what's working and what's not. Then really, what part of my playbook or recipe for success has been really looking at building with the mindset of scale, especially for fintech companies that I've been with, that are predominantly a little more early stage. They've gone through some rounds of funding, but however, they still need to kind of get on that kind of growth journey from 10 mil revenue or 20 mil to hit the 30 to 50 mil in revenue, and even the next echelon of 100 million plus. So those stages of businesses are always looking for ways to build and scale. One of them is strategic partnerships, which I've been involved heavily in the last few years, and how to embed those technologies is really the I think key thing that we're seeing in fintech over the last few years is once you've created your platform, your technology, your solution, how can you make it more pervasive in other partner platforms so that it drives growth from similar or like industries that have a similar audience to yours.
Mm.
So those are some of the things that we've done, and in terms of continuing to grow that, like at Nav, when I was at Nav, we concentrated on expanding our channel business and creating new SMB solutions that resonated with the small business, medium-sized business audience, and that really drove growth. It drove with a few of their key pillars, which were credit building for small businesses, helping them establish good credit to get better rates on lending and different banking services. Also, the integrated package that we offered that included a business checking account, open banking with analytics, and really their financial health platform, so that it just took away the guessing work in terms of what they needed to focus
Mhm.
on in their business. And then lastly, just the marketplace of offers of financial products, which included credit card offers, insurance, taxes, accounting. You go down the line, and it had a foundational offer for everything core to small businesses today.
Mm. You mentioned that you had to operate differently when you're dealing with early stage startups as opposed to late stage startup. Um, Now, the function of every firm is to grow. And as you grow, it becomes imperative that you keep adapting to the newer environments just to ensure that you don't end up with what's called organizational inertia, that things that worked when you were in early stage, they probably won't work once you're in the later stages. So when you look at that perspective of growth, how how do you manage sales and corporate development?
Absolutely, great question. It's it's something where you have to, I believe, from my experience, identify those stages early and understand the growth patterns of the business, but also what's coming, what's trending for that business. If you lose sight of, how the markets, external markets, but also how your internal base might change over time, and what their needs might change, you start to lose focus of how to respond and continue serving the needs of your audience, your customers at the end of the day. So one of the things that is important is really looking at not only your dashboard metrics, your KPIs, other key performance indicators. All of those things are really your pulse check on the business's health. And
Mhm.
so with data, with those metrics, you're going to be able to make smarter decisions. It's always, I always go back to the numbers, go back to what the business is doing and understanding then, what are the trends, what's working, what's not, and then shifting and adapting. Because just like for example, a business plan for a company is usually from the onset, but it is not set in stone. It has to evolve over time, and so does your tactics when it comes to continually growing at different stages. It includes your operation, your OPEX spend, your
Mhm.
CapEx spend, your HR your HR complements has to grow, and you have to be ready to make the investment back into the business as well, at the right time and at the right juncture to continue the right growth trajectory.
So let me look at this. Um,
Yeah.
in terms, let's see, I'm not sure how to phrase this exactly.
Mhm.
You mentioned about looking at the numbers, right? And empirical data obviously is very important when making business decisions like this. But do you have any qualitative data that you also look at while making these decisions?
Yeah, absolutely. I mean, from a qualitative perspective, you really have to look at, I think one of the main things is your solution still meeting the needs of
Mm,
the, end user? Though, like I hinted to that before, is that those might change as well. What the product can satisfy for your initial customer, those needs can also change, and it's important to sometimes even evolve the product itself, right? So it won't remain static as day one what you came out with,
mm,
and so in that sense, as you're you're coming out with new iterations of that solution and maybe adding more value, you also might be changing, the offering, the price mix, and just understanding which customers are more valuable than others, and really honing in on what makes the
Mm,
most sense to drive business forward. Because not every, if you really look at things, sometimes there are different classes of customers, I guess, there or segments of customers where you might be spending too much time to nurture and grow, and it might be detrimental to the growth of your business. So you have to make hard decisions from a business perspective in order to continually keep growing it in the right direction.
mm. Awesome. I just want to make a quick point out to our guests. Julian is open to the questions, so if you have any question that you wish to ask of him, please use the Q&A or the chat feature to put up your questions there. Once I'm done with my questions, I'm going to go on to the audience Q&A. I'm going to select whichever ones are the most relevant, and I'm going to ask those. So if you do have any questions, please ensure that you put them up on the chat or the Q&A section at the bottom. Moving on, Julian, you have had previous experience in online fraud prevention using AI and machine learning. My question is, how can AI be integrated into fintech, particularly with the perspective of enhancing security and fraud detection?
Well, yeah, this is a something, I guess, a solution that is near and dear to my heart. When I spent time at Email Age, really learned a lot, studied on AI and machine learning as well, and really they're powerful, really learning tools that are used to enhance the security and fraud detection in fintech, but also other surrounding industries. At Email Age, we used it from a use case perspective of onboarding. So a lot of times businesses needed to vet in a very proactive approach, who are the customers that are coming to their doorstep? Are they good actors? Are they, perhaps, are they trying to infiltrate and, game your platform? Are they trying to lie dormant for a while and then leverage their network and defraud you out of your revenues, your platform? So knowing who comes to the door, that's one use case. Another one was point of sale transaction, being able to respond in milliseconds with a bunch of data points,
Mm,
and from a consortium perspective as well, meaning the solution that we were leveraging at the time was able to correlate good transaction behavior of that email that they used and correlate it to instances that they saw. Ishaan went today to Starbucks. He bought a latte. He
mhm,
a few months ago bought an airplane ticket and stayed at this hotel. So those vectors were good signals
mm,
that added to the positive kind of reinforcement and saying, yes, this person is who they say they are. Proceed with the transaction. So it has a very vast amount of real time data that can be analyzed, analyzing patterns, anomalies, keystrokes on a keyboard, all sorts of things that denote if this person is who they say they are. Are they a human behind those actions as well, right?
mm,
So
mm.
it really is something that enhances all aspects of security for your businesses and protects your revenues. And so yeah, it was very, very good.
Awesome, awesome. You clearly took a lot of learnings from your time at the fraud prevention organizations. Question is, how do you apply that learning into your current role?
True, yeah. So in the current role, I mean, it is always something in the back of your mind, knowing that um, you have to also, while being on the offense with your security kind of, I guess, tactics, you the fraudsters will always try to, one up you, right? So they'll try to be one step ahead. It's an organization's, especially in the fintech space or financial space, to ensure that you're creating a defense system essentially with multiple different vectors. And nowadays it's so important. I mean, there's weak points sometimes in legacy systems that can be exploited. There are we just talked about more of the AI machine learning tools that really help to detect real time essentially
Mhm,
threats, right? And so the thing is, there's never one singular response that will cover it all, and you
mhm,
just have to be that's why in current roles, it's always mindful or good to work with your IT security team to ensure that those are being addressed in a manner that meets the business needs.
Right. There's no one size fits all approach that you can implement. You have to be situationally perspective. All right,
Exactly.
superb, superb.
Hmm.
So, talking about the different trends that we've seen in fintech, we've seen an explosion of NFTs. We've seen their rise, their fall, and now eventually their renaissance. In terms of DLTs, we've seen the growth of blockchain, but now we also hear that things are moving away from the blockchain infrastructure towards other DLTs. AI itself, with the Gen AI coming out
Yeah.
as a huge player. What trends do you see as the ones that will shape the next decade?
Oh, wow. Yeah. Great question. I mean, one for blockchain DLT, it would be I really see the gaming space just continuing to evolve in terms of what AI and machine learning will do to create these environments in the long run, but also how the underpinning technology will create economies or real kind of world interfaces where virtual will bleed into physical real sold goods and exchange commerce, right? So that's really interesting. But yeah, I would say in addition to that, I mean, it's just continually evolving in so many areas that it's hard to
Mhm.
keep up. I have a tough time keeping up with all the iterations, but I think that seven kind of trends, I guess, that we can look forward to over time is, how like I guess the popularity of like DAOs, autonomous organizations, those were really going to kind of grow on their own in different areas, such as disrupting finance and governance and supply chain management. I would say decentralized finance, DeFi, has been around for a while now, but really, again, it's being able to perhaps take advantage in the long run of a weakening US dollar, and being able to provide another means of financial systems to
Mhm.
really make those exchanges happen. NFT expansion you mentioned was really popular. It kind of took a bit of a step back right now, but I think there's still probably a way of leveraging this for future projects that would really make or take advantage of a community based like asset trading, any sort of like collectible that are launched and sent. Those are really cool. And blockchain as a service. I mean, you look at blockchain for enhanced transparency, security, efficiency measures. Blockchain will still power. You look at IBM. I went to a conference a few weeks ago, and it's amazing how much investment they've made in not only their Watson platform, but
Mhm.
how a lot of their new use cases for their clients are blockchain based. So it's just yeah, it's going to be so many. Hopefully, I've answered some of the trend questions for you in that response.
I mean, there certainly are some major players in the fintech market at the moment, but the crux, the absolute playground of fintech exists within the startup ecosystem. And at Seneca Fintech, we do try to foster an entrepreneurial spirit amongst our students. So, what advice would you give to our students, to entrepreneurs, to fintech startups who are looking to disrupt this market?
Oh wow, yeah, that's an excellent question. I would say really focus on. It doesn't have to be a multitude of solutions wrapped into one. The beauty about I think the fintech space is that if you do one thing really well, and take a slice out of that, um, that becomes your doorstep into the world of fintech and disruption because that one kind of aspect that may have not been done or that you're going to do better than anywhere else will evolve and grow or find its way into perhaps an existing larger solution or a more established company might look to acquire you. And so these type of things are really, a key thing. It doesn't have to be an overall encompassing better mousetrap. It can be one aspect, I think, is what I'm getting at. That is a great first step to really forge ahead. So
Hmm.
yeah, I would keep that in mind. I mean, one example is in the world of lending, for example, because that's a space I'm familiar with. Lending has always had a challenge with speed of lending to verifying and collecting all the documents needed in order to feel that they can mitigate the risk and lend to that individual or business. With that in mind, how do fintechs address a problem like that, where it's been traditionally kind of the onus is on the individual to upload documents and all of these things? Well, like now seeing sort of trends where a lot of this would be coalesced together through a fintech or through like some sort of solution that enables the individual to carry around maybe a an updated passport, if you will, of their business documents or their business goods, and perhaps even from a click of a button, just ingest all of the updated information so that they can provide that to the next bank institution or lender or whomever. It would be essentially that blockchain based approach, or perhaps something to that effect, where it becomes a almost like an Equifax credit score, but with
Hmm.
all of their up to date vital business information or personal information in order to get those type of products.
Amazing, amazing.
Yeah,
I hope our
yeah.
students were listening to those golden words of advice. Julian, you've had leadership experience across a multitude of firms. You've had leadership experience in financial services, in technology as well. How has that shaped your approach to leading teams in the fintech environment?
Oh, it's been something that's evolved over time. I would say that having really understood and looked at numerous businesses and been part of them, it's shaped my understanding of how to not only work with different various teams, understand the personalities, understand which type of folks need what type of support systems and all of that. So the human aspect is still very big in terms of teams and team building. Um, the element of always ensuring there's a element of fun. I mean, you're working with these colleagues day in, day out, and sometimes in an online remote, distributed fashion. It's not always we don't always have the luxury of, especially in the fintech world, of being face to face all the time. So it's how do you galvanize those teams to produce in their most at their highest capacity in order to contribute to the overall goal. So it's my overall kind of evolving understanding of that leadership plays into those aspects, and nurtures that, but also understands the work-life balance as well. So it's something that I've evolved that understanding over time, and not just been singularly business metric focused, right?
All right. Awesome, awesome. Now, pivoting a little away from all this, you've made some significant contributions through the Canada One Foundation. How do you balance leadership in fintech with your community impact, and what role does philanthropy play in your professional life?
Great question. This is well, for me, I've always had a passion to give back to my community. Essentially, I grew up in Vancouver, Canada, and remember playing sports and having a love for the outdoors. It's the West
Hmm.
Coast after all, and so one of I always had a I guess a mantra of you know giving back to what you believe in, right? So you have to find your passion. Once you find that passion in terms of where you also want to take a leadership role or aspect of giving back, it doesn't become work. It's something that becomes, enjoyable, and you can parse that out off of the side of your desk, and put hours to making something really beautiful happen. Um, for myself, I've worked with my co-founder and longtime friend Howard Kelsey, former, I think, well, he's a former Olympian, basketball Olympian, and business person. And so back in 2001, I joined the Canada One Foundation, helped to run philanthropic tournaments and events for high school level kids for basketball, and I think over the years we raised about over 1.1 or 1.2 million in post-secondary scholarship education grants for Canadian universities. And that went and we essentially created in a similar, I guess, vehicle into the community aspect at Kitsilano Beach, which we mentioned at the top of the hour, where we took the same premise but applied it to our local community and had an annual summer festival with sports and open free to general public, and raised sponsorship dollars from companies and gave back to the community through repaving and renovations of the basketball courts, tennis courts, and palm trees on the beach and so forth. So it's just been a continual giving back that legacy back to the community, knowing you're doing something good. And I just encourage that, because you can do those things in parallel with your career, and try to continue giving that message to our young leaders of tomorrow, and just allow them to know that it's that's a very fulfilling thing, and a good example to our next generation.
That's brilliant. Thank you so much, Julian.
Yeah, my
It's
pleasure.
it's a common perception that in a field like fintech that requires so much, one has to essentially give up on their passions and their likes. But you prove that that's not the case at all. So superb. We have a
Thanks.
question from the audience. Uh, the audience asks, Lian Hong asks, how do the current macroeconomic conditions, such as rising interest rates or inflation, affect your growth strategies?
Oh yeah, great question. I mean, those external market conditions are always a factor. I mean, right off the top, with interest rates, having been the way they are, it affects, it contracts things. So spending, for example, for businesses, it affects budget sizes. It affects their ability to hire and grow, at the steady pace at which they may have been used to. Even the attraction of investment into businesses, that's something that there might be less willingness for certain investor types to invest into a business in times of uncertainty.
Hmm.
Um, I think things like that are starting to ease a little bit. There's a lot of money in the private equities. The real, I think there's a slow shift in that, as well as if you look politically as well, those factors may change with obviously the U.S. going for their reelection time. Oftentimes signals perhaps a more hopeful or prosperous time once things stabilize. But yeah, market conditions are very much a real factor. It affects how individuals spend, which obviously is how different small businesses will spend. The economy, if it slows down, it can affect all aspects of our society, right? So it's a
Mm.
very good question.
Awesome, awesome. We have another question from one of our students. As fintech students, what advice can you give us in order to get one foot at the door? What skills should we focus on?
Mm. Oh, that's great. I mean, often I would say for getting one foot in the door is really number one. If you don't have fintech or technology experience on your resume today, a good way is actually to number one, attend a lot of different open events. There's a great networking community in Toronto. Toronto is one of the largest, if not the largest, technology hub in North America. And just having the ability to network with folks that are in the industry and have them know who you are, that's number one, I would say. Number two is go out there and see if there are opportunities to work on a project that might benefit or get your foot in the door with some of the earlier startups, right? They're always looking for the ability and for individuals that are go-getters that will work on projects or a certain aspect. And there might be that co-op type environment that could really help to get something on the resume and then build into your next future role in the fintech space. So those are great avenues, and yeah, I would say just continue on and network. Follow me and ask me questions. I'm always a networker and love to help people out as well and get them in the right places.
Superb, superb. Thank you, Julian. We have one final question from one of our students. Which industries, from your experience, are more open to adopt this tech now, as opposed to earlier when the idea really started off? And which are still skeptical, giving sales a hard time?
Yeah, that's a doozy. Yeah, I would say that well, focusing in on financial industries, I know the insurance industry or insure tech, those industries are still, being very traditional and safe guarded industries. They are always a great kind of sector to work for. They have that stability, but they're also looking to make their traditional ways of working with companies and offering their products more digital, more online. And so there's significant I would say traction in that industry that make that ripe for new contributions, new talent. Other than that, I mean, there is, let's say, lending. Lending is taking a little bit of a slower pace right now, but I think that is at its, it's reached this trough, low trough. So now I think the lending will start to pick up
Hmm.
again, and as those cyclical changes, occur, it just becomes the right time at the right moment to get involved again. Once the purse strings are, so to speak, loosened. And yeah, so that's another one. And then, of course, the fields where AI and machine learning are really being applied to various industries. You look at how AI and machine learning is helping investment analysts do their job, more easily or more readily with information that can be sourced in minutes versus an analyst doing that in 3 days to a week. So that just allows those individuals to focus on better or more meaningful tasks while these disruptive technologies or maybe complementary technologies are helping to really enable that human and computer kind of symbiosis to make it more um, just make work a lot easier, right? And allow them to focus on what sales kind of aspects of the job or growth aspects are important.
Awesome.
Yeah,
Julian, this has been an absolutely informative session. Thank you so much. I hope our
pleasure.
students are entirely enlightened by your experience. And again, if you're willing, I'd like our students the opportunity to connect with you. I think you did mention that they can follow you on LinkedIn. I will share with our students and everyone else as well your LinkedIn profile. But other than that, thank you so much for being with us today, Julian. This was
My
absolutely
pleasure.
spectacular.
Thank you, Ishaan. Thank you, everybody at Seneca, and keep working hard and find your place in the fintech world.
Thank you, everyone, for joining. And I'll see you all at our next session in 2 weeks' time. Until then, take care and stay safe.